Howdy folks, this is Trader Big T with your trading lesson of today, where we will be discussing live calls made in the TimothySykes.com chat room. I'd like to discuss a few stocks today and a few trading issues that are pretty interesting. This is SPY. This is the S&P 500 ETF. And what you can see is something very interesting happening today. There was this action. There's 9 a.m., 9:30. We had an open. Cop came up and fell and sold off early. And then right around 11 a.m. in the east, it put in this bottom. Right here we can see that that number is about 11,836, 118.36. And then the indexes came roaring back up here. And then we came all the way back down. And on this candle right here, 5-minute candle, 14:55. That's like, an hour, a little bit, an hour and 5 minutes before the close, it bottomed out almost at that exact number. So it looked like it was going to be put into double bottom. That's what it looked like. And probably a lot of people position themselves trying to buy in for a bounce. But then it smashed through on this heavy volume here. We got this fall here. And it just smashed right through it. Eventually it bottomed out, and then it came back, and then that same point, you can see this little line that's going across horizontally that I've drawn, kind of serves as a form of like new resistance here. And what's interesting about this is it was an interesting play here. You could have taken an inverse ETF, a weighted ETF like SPXU or SDS, and you could have scalped with a pretty decent sized position on the failure of the double bottom to hold, because most of people who are already invested believed that it was going to hold and that it was going to bounce and be a formed double bottom, but in fact it did not do that. It just collapsed from there, and you had the ability to exploit other people's misfortunes. You're basically an ambulance trader, an ambulance chaser if you want to be an effective trader. So try to take advantage of other people who have already acted first. And I posted an article on this on my blog regarding trading failed chart patterns. Definitely you should review that. It's very effective, almost more effective than following a traditional shop-worn technical analysis pattern, because when you do that, everybody else already looks at the same materials. It's much better when you can exploit a failed pattern, because that way you have people who are bag holders who take actions that enable you to enrich yourself, as here. Okay, and again, don't trade discretionarily. We see SIGEX. SIGEX, it faded, so it really wasn't so great, the actual play that you got on this later on in the day, because it had fallen so much. Right here we see this little kind of bottom put in here at about 252, I believe it was so. And then we had this sideways consolidation price action. And then we reached this point, 15:30. This is like 30 minutes to go. Not a lot of time for you to really make a play, because there's like 30 minutes left to go in the market. We breached that level, and you had this quick short entry, almost like for a scalp. It didn't yield very much. In fact, if you'd stayed in, you probably would have lost a little bit. And then when you come back over here, you're doing okay now. But at least you had a valid Q signal to get in. You didn't have an ideal setup, but you had something to work with. Okay, this was an interesting play. It actually recovered, but the initial play that was pretty straightforward. Let's look at 2 days. What we had was a close of, I believe, 126, and then on the current day, we opened a little bit below, but we quickly went green, and then we went red. And once we punctured that level, you had a preliminary signal that you could have shorted. It's a little tougher to do that in the morning, trying to rely on that to hold. It's much more safe for you to try to short a breach of the previous close, or breach of support late in the day, in the afternoon, rather than in the morning, because you often get these false moves and then it comes roaring back and ends up being really positive. But here it just collapsed right through. went through below its opening price and went below its previous day's close, which gave you your short signal, and then bang, it just smashed all the way down here. And had you covered reasonably and not gotten greedy, you would have gotten like 8–10%. So it was actually a hidden, really nice play. And it recovered later, but presumptively you would have been out by then with your gains. Pure, this is a really big up stock. Actually, past 2 days, it's had some nice action on it. And it was up so much that people wanted to short it. That in and of itself isn't necessarily sufficient. It came up here and it faded a little bit, and then it had this sideways consolidation, and it put in this low here early in the sideways action, 317, and come across, and then several people in the chat room shorted this when it was beginning to break that 317 level here, and the problem was is it didn't continue to break down. And so when a trade doesn't do as you expect, you should consider getting out, because if the trade is really good, it should give you the proper feedback that it's working. And in this case, it did not do so, so a lot of people exited it. But at least you had a valid Q signal. You don't trade discretionarily. You get a clear setup where you know what kind of play it is, and you act decisively when you get an entry signal cue. Okay, folks, that does it. We'll see you again next time in the trenches as you learn to trade with Big T.